Welcome, everyone. See people joining us. Get the presentation started shortly. So as people are joining, we're going to start with a video that was done in Cambodia, just to give a sense of some of the tools that are being used to promote digital wages.
Cadet នៅក្នុងប្រទេសកម្ពុជាតាំងពីគាត់បានចាប់ផ្ដើមធ្វើការពីឆ្នាំ2017មកវិស័យកាត់ដេរបានឆ្លងកាត់នូវការផ្លាស់ប្ដូរជាច្រើនលើកច្រើនសារក្នុងគោលដៅធ្វើឲ្យប្រសើរឡើងនៅលក្ខខណ្ឌការងារការវិវត្តចុងក្រោយបំផុតនៃការបើកប្រាក់ឈ្នួលកម្មករបានផ្លាស់ប្ដូរទៅជាការទូទាត់តាមប្រព័ន្ធ Digital
ពីមុនមានអារម្មណ៍ថាភ័យខ្លាចចង់និយាយថាពេលដែលវេលុយចូលទៅខ្លាចបាត់ខ្លាចអីចឹងណាបងសារតែយើងធ្លាប់តែប្រើអីធ្លាប់តែបើកលុយជាសាច់ប្រាក់សុទ្ធហ្នឹងវាច្រើនឆ្នាំហើយដល់ពេលឥឡូវបែរជាបើកលុយទៅតាម digital វិញចឹងវាមានអារម្មណ៍ថាពិបាកចិត្តសម្រាប់អ្នករួមការងារជាមួយគឺក៏គាត់ពិបាកចិត្តដូចគ្នាមានអារម្មណ៍ភ័យខ្លាចបាត់លុយ
ការផ្លាស់ប្ដូរនេះមិនត្រឹមតែជាកត្តាប្រឈមសម្រាប់កម្មករប៉ុណ្ណោះទេប៉ុន្តែក៏ជាកង្វល់សម្រាប់ប្រធានគ្រប់គ្រងរោងចក្រជាច្រើនផងដែរ
សម្រាប់ខាងរោងចក្រវិញក៏គាត់មានការកង្វល់ក្នុងការដែលយើងត្រូវរៀបចំបដោះក្នុងរយៈពេលប្រមាណដើម្បីឲ្យពួកគាត់នឹងមានប្រព័ន្ធប្រាក់ឈ្នួល digital នេះទាំងអស់គ្នាយើងក៏មានការជជែកជាមួយនឹងខាងធនាគារដោយសារយើងត្រូវចំណាយក្នុងមួយខែដើមទុនប្រមាណដើម្បីជួយដល់កម្មករដោយមិនចាំបាច់ឲ្យពួកគាត់អស់ប្រាក់កាសឬក៏គាត់ចំណាយពេលវេលាទៅធ្វើផ្ទាល់តែម្ដង
ទោះបីជាមានការព្រួយបារម្ភពីកម្មករនិងអ្នកគ្រប់គ្រងក្តីនៅឆ្នាំ2019រោងចក្រ Yida Manufacturer បានចាប់ផ្ដើមដំណើរឆ្ពោះទៅរកការងារទូទាត់ប្រាក់ឈ្នួលតាមប្រព័ន្ធ Digital វឌ្ឍនភាពថ្មីនេះបានចំណាយពេល3ឆ្នាំទើបបានទទួលលទ្ធផលដោយជោគជ័យ
ចង់និយាយថាខាងរោងចក្រចែកក្រាស់ឲ្យយើងមើលលុយយើងមើលតាមតនចិត្តហ្នឹងតើក្រាស់លុយរបស់យើងហើយនឹងខាងរោងចក្រវាចូលហ្នឹងវាត្រឹមត្រូវអត់ពេលដែលយើងចង់ដកលុយគេថាយើងចង់ដកមកល្មមយើងចាយយើងដកទៅពេលយើងចង់ទុកក្នុងហ្នឹងទុកបានការបើកលុយជាសាច់ប្រាក់សុទ្ធសំលុយដូចជាដាក់ក្នុងខ្នើយញាត់កូនជ្រូកដាក់ក្រុមពូកក្រុមអីហ្នឹងពេលឥឡូវបើកលុយតាម digital យើងដាក់នៅក្នុងកង់របស់យើង
អញ្ចឹងនៅពេលដែលយើងចាប់ដើមបើកប្រាក់ឈ្នួលតាម digital នេះចេញមកគឺមានការសម្រួលជាច្រើនកាត់បន្ថយនៅការចំណាយទាំងពេលវេលាទាំងហានិភ័យរបស់ពួកគាត់ទាំងភាពច្បាស់លាស់ឬក៏มันមានសាច់ប្រាក់ដែលលហែកដែលគាត់ត្រូវយកមកដូរអញ្ចឹងគឺល្អជាច្រើនហើយសម្រាប់បើរោងចក្រដូចខ្ញុំនិយាយមិញអញ្ចឹងគាត់គឺចំណេញដោយសារផលិតភាពរបស់គាត់បាទផលិតកម្មគឺផលិតភាពរបស់គាត់គឺអាចចេញទាន់ពេលវេលាដោយមិនចាំបាច់ចំណាយពេលវេលាទាំងអស់ហ្នឹងអញ្ចឹងបើសិនជាយើងទូទាត់មកខ្ញុំគិតថាក្នុងរយៈពេល2ទៅ3ឆ្នាំគឺយើងអាចនឹងត្រឡប់មកវិញបាន
Great. So welcome, everyone. My name is Craig Churchill, and I'm the head of social finance here at the International Labor Organization. We've got a great webinar for you today. The video that we started this webinar with from Cambodia highlights a lot of the advantages of employers switching the wage payments from cash to digital wages, either into bank accounts or mobile wallets. And so you can see their benefits for the workers in terms of place to save, being able to easily track and monitor, much more transparent, and for the employers, much more productive and more efficient, and certainly safety concerns, among other things, for everybody. So what we want to cover today is the process of this transition from cash to digital wages. And we're going to start the webinar with Leora Clapper from the World Bank, who's going to give us some evidence and findings from Global Findex report that shows some of the trends that are out there and some of the issues that are out there related to responsible digital wage payments. So Leora, why don't we start with you?
Thank you. Let me share my screen. Oh, I'm sorry. Would the host please allow me to share my screen? So it's been an honor and a pleasure working, collaborating with the Global Center on Digital Wages for Decent Work, and a pleasure to be here today. Please finish. Sorry. Can I share my screen, please? So let's see. Get started. Apologies, I'm still getting an error that I'm unable to share my screen. So let me begin with my introduction. So I'm going to talk today about data from the Global Findex Database. This is the world's first and only global database on the use of financial services, measures how adults in over 140 countries around the world save, borrow, make payments, and manage risks. We first started collecting the data in 2011. In 2014, thank you. You could please continue. We added additional questions on the use of payments, a number of case studies, how people receive wages, government payments, remittance payments, agricultural payments, and more. If you could please advance the slide. Two more, I think. Thank you. That's good. So importantly, the data is representative on the national level. It can be spliced by gender, by income, by rural urban residents, and more. Here's a photo I took actually, so we're now piloting the 2024 Global Findex questionnaire. We were speaking with a garment worker in Bangladesh about her financial life, her use of formal and informal financial services. And we'll be expanding the questionnaire to add more questions, more nuance around how people receive their wages, including, for example, whether workers withdraw the full amount on payday or leave some money, leave some balance in their account to hopefully better manage their money. Next, please. And next slide. One more, please. Thank you. So just to give the highlights. First, we have evidence that digitalization of wages can help expand access to accounts, brings over 40% of adults, of women and poor adults, or almost half of all adults with an account, say they open their account to receive a wage payment, with the caveat that number, the headline number, includes both public, government, and private sector wages, but certainly pointing to the importance of the private sector, the government leading opening accounts. Second, we also see tremendous opportunities for further digitalization of wages for both the unbanked, over 160 million unbanked workers say they receive private wage payment in cash, as well as the increased usage of accounts for the banked. Over 200 million workers with an account say they receive their money in cash. Another important caveat, many of these workers might be working in the formal sector, for factories, for plantations, etc. But it likely also includes many workers working in the informal sector, where there we face issues around formalization and taxation, which might be a barrier to digitization. It's also important to note that almost all workers receiving cash payments say they have their own mobile phone, offering opportunities to leverage technology to provide these financial services. And third, and quite importantly, that financially inexperienced workers who were previously, especially those who were previously unbanked, can benefit from the digitalization of their wages unless they can use their account confidently and responsibly and know how to avoid many consumer protection risks of financial fraud and abuse. And we find about 20%, about 1 in 5 workers who tell us they receive their wages directly into an account say they paid unexpected fees on withdrawal transactions. Again, I don't know if that's actual, I don't know if they just were unaware of the fees or if illicit fees are being charged. This is another area where next year's questionnaire will dig a little deeper into people's vulnerability to financial fraud and abuse. So just showing the headline, this is the map of the world of financial inclusion. It's gotten a lot darker over the past 10 years. Today, about 76% of adults globally have an account. That's up from only 51% in 2011. You find 71% of adults in developing countries have an account. That's a 30 percentage point increase from a decade ago. Next slide, please. And so here's, just to set the ground, here the height of the bar are adults with an account in a sample of mostly upper middle income countries. The dark blue bar showing the percent of those adults who report opening their first account to receive either a public or private wage payment. And as you can see, it's tremendous. It's about over half of all adults in South Africa, Thailand open their first account to receive a wage payment. And we see large numbers in other countries as well. Next slide, please. And it was referred to in the lovely opening video, just a reminder of the importance of the digitalization of wages, the potential to reduce the costs for the factory. We've documented ILO, the World Bank, USDF, and others have measured the cost savings for factories in Bangladesh, Cambodia, Egypt, and Jordan and elsewhere, showing the benefits the factories are reducing the literal cost of dispersing cash, as well as the lost production time. Workers can also benefit from the use of digital financial services. Often it's the first contact with the formal sector, and could also lead to access to additional financial services that they need, such as savings and appropriate credit. And finally, what we found in Cambodia, for example, was the opportunities leveraging the developed financial technology infrastructure for the delivery of digital wages via technology-enabled accounts. And next slide, please. So here, the height of the bar are adults who tell us they received a private sector wage in the past year. And again, an important caveat that we don't have any information on the employer. But this is adults who say they work full-time for a private sector employer. Looking at the far left, you can see even just since 2017, we saw a growth in digital wage payments. That may also be reflect the impact of the COVID health pandemic during periods of social distancing when cash is perceived as unsanitary. There was a shift toward the digitalization of wages, the safety of both the factory managers dispersing the money as well as for the workers not having to wait online. There are also some interesting policy initiatives. In Bangladesh, for example, a government initiative to support the garment industry to help them make their wage payments, require the money to go directly into an account of the workers, bypassing the factories directly. And we saw a growth in the percent of adults in Bangladesh receiving money directly into an account, especially for women. And here, just looking at a sample, again, mostly upper middle income countries, here is showing over half of adults in many of these countries receive their money, their wage payment, these workers. For example, in Turkey, 32% of adults say they receive a private sector wage, and 20% of whom say they receive the money directly into an account. Next slide, please. This is really interesting. So what this is looking at is looking for a sample of sub-Saharan African countries, many early adopters of mobile money with more developed mobile money markets, especially, where we ask the same question. But we have, for actually all countries, we ask the follow-up. Did you receive the money into an account at a bank or similar financial institution or into a mobile money account? And what you see here is that in Africa, with more developed mobile money market, so this is financial services access typically through mobile phone agents, typically locally in the village, more accessible and affordable access to financial services. Employers are using or leveraging that mobile money network to make wage payments. This is an exciting advantage of allowing workers, again, more conveniently and affordably leave a little bit of their money, a little bit of their wages in their account to manage their money over the month. Again, we have from small samples of surveys, from some focus groups, it appears that even informal employers are starting to use, are leveraging the mobile money network to pay their workers as a safer than dealing in cash. And again, the benefits for the workers, the ability to leave some money in their account, less susceptible to theft or impulse purchases to achieve their both monthly and longer term goals. Next slide, please. Just for a moment, referring to some research I've done with co-authors Martin Kans and Emily Briza. We're in Bangladesh. We worked with a garment factory where some workers were paid in cash, others paid directly into an account. We found that workers paid into an account more than double their savings. The money came out of impulse purchases, consumption of things like chips and soda. We also found them better able to manage their monthly money, less likely to report financial stress such as skipped meals at the end of the month. This is just showing up one figure, and just by the great disparity of the bars, making the point that here the overall punchline is that we found greater financial savviness, financial capability of workers paid into an account. They're better able to use an ATM on their own outside the factory. They were able to send money to family back home directly from their phone, bypassing using an agent, which often incurs additional fees. Overall, these became financially savvier customers. And so we refer to this as the learning by doing. By being paid into an account, by getting that financial experience, they became more confident financial users of financial services. Next slide, please. Okay, so here the question is, what's special about the Findex data? So we can actually measure what are the opportunities out there to digitize wage payments. So here, the height of the bar are adults who report receiving a private wage payment. The blue bar are those who are paid into an account. The orange bar are those who are paid in cash only. This is a different sample of countries, really pointing to some countries where there are the opportunities. So for example, in Pakistan, digitizing private wage payments can increase account ownership by up to 13 percentage points, up to 200 million 20 million unbanked adults. Next slide, please. And so just giving that more this flavor of the numbers in millions, here the orange bar is showing where are the biggest, in terms of millions of adults, opportunities to digitize these private wage payments. Next, please. So here, this is an interesting slide. So what we're looking at here, again, the height are the percent of adults who say they receive a private wage payment. The blue are those who receive it into an account. We're then splitting those who receive their wage payments in cash between those who are banked, who have an account at a bank or a mobile money account, and those who are unbanked. And so focusing on the orange, the bar right above the blue, these are adults who are paid in cash but have an account. That's a large, over half of adults in Indonesia who are, and Bangladesh who are paid their wages in cash report having an account. In Bangladesh, that's mostly mobile money accounts. So here's an opportunity, and also to achieve the goals of benefits of digitizing wage payments. The ultimate goal is to develop the whole ecosystem, encourage workers to use their accounts to save, to build a credit history, to use their account to directly pay merchants for merchant payments, for bill payments. And so the biggest opportunities towards developing the ecosystem are first with this orange bar, those adults who are already banked. We could leverage these accounts. And then the red bar highlights the opportunities to expand financial inclusion, expand access to accounts among the unbanked by digitizing wages, such as the biggest opportunities looking at Egypt, Pakistan, etc. Next slide, please. It's also just, I think, important to see that here we're splicing the bar, the percent of adults receiving their wages in cash by those who have a mobile phone, access to technology, and those that don't. And the punchline here is that most adults who are receiving payments in cash have a phone. This is the dark blue bar. We can even look even further. We find that in Jordan, Pakistan, it's Jordan, Morocco, and the Philippines, and elsewhere, we even have very high access to the internet. And so really the opportunities to leverage technology-enabled accounts, whether it's mobile money accounts in Bangladesh or mobile banking in Cambodia and elsewhere. Next slide. And so my final slide is just the reminder that in order to achieve the benefits of financial inclusion of digital wage payments, the worker has to be able to confidently and responsibly use their account. What we're showing here is that the vast majority of workers do not report any concerns about withdrawing their money. However, 7 million adults in Brazil, including 3 million women, 3 million adults in Turkey, including 1 million women, report that when they receive that there were unexpected fees when they withdrew their money. And again, that could be either that they were unaware of the fee structure, they were unaware of withdrawal fees, perhaps after their first withdrawal, or there were illicit fees charged upon the withdrawal. And so this really points to the importance, both as we found in our work in Bangladesh, the importance of ongoing financial education. We required someone from someone from the bank was on site for every pay date for the full 2 years of our project to provide that assistance on site over time as workers build their capability. It's also the importance of strong enforced consumer protection, especially of agents and other client-facing staff. And finally, it's the design of the right products, designing products with financially less experienced, perhaps less educated workers in mind. So thank you again for this opportunity to discuss the data, and let's look forward to the conversation. Thank you.
Thanks, Leora. Super interesting. A lot of progress has been made over the past few years, which is super exciting, but also there's still a big opportunity out there. I think it was over 160 million people still, workers are not receiving wages or are receiving wages in cash. So that shows that there's still a lot more to be done. But it is really interesting to see the driver of how digital wages is driving financial inclusion. So many people opening accounts just because of their to receive their wages. But the unexpected fees are certainly a cause for concern and something that needs to be looked at more carefully. There's a question that came in for you about what is the other method of receiving wages besides cash and into a bank account or mobile wallet. A couple of times there's a little sliver there.
Yeah, so that actually, and if you look at the specific countries, we assume those are in-kind payments. Interestingly, we've actually done some work, for example, in Sri Lanka, where workers on tea plantations are paid also in kind, such as their housing or food subsidies.
Okay, thanks for that. So as some of you have already figured out, please use the Q&A function to be able to put it in your questions. We're not going to have time for sort of an open Q&A at the end of the session, so the panelists are going to be monitoring the Q&A and looking to try to respond to people's questions as the session unfolds. So Leora, thanks for that. And now I want to turn the floor to my colleague Valerie Breda, who heads up our work on digital wages. And she's going to be talking about a recent output that we have on promoting responsible digital wage payments. Valerie?
Yes, thank you, Craig. Thank you, everyone, for joining our webinar. It's really a pleasure for me to share some of our learnings over the past few years. We have worked with the Global Center, the ILO's Global Center on Digital Wage for Decent Work. We have worked to explore actually how we can accelerate the transition to digital wage payments. We know that paying or receiving wage payment digitally is obvious for many of us. It is safer, it is faster, it is more convenient, it is more transparent, it is more efficient for employers and for workers. For these reasons, many workers already receive their wages digitally. However, we, as Leora highlighted, we also know that millions of workers are still receiving their wages in cash. Craig mentioned the figure of 160 million, or Leoha mentioned, but actually there are many others who have a bank account, but they are still receiving their wages in cash. Other workers have a bank account also, and they are paid on bank account, but they cash out their wages on payday. So they are really losing the benefits that digital wages can bring, such as having access to savings or credit services, for example. There are many reasons that explain those gaps. Employers may lack the skills to transition, they lack the time, they lack the resources to transition. The workers may not have an account, as we have seen, but also they may not feel confident to use digital tools. They may mistrust financial institutions, or simply because they don't find it useful because they cannot use their digital wages in the transactions they are making on a day-to-day basis. So we see a growing body of evidence, actually, that show that the transition, when the transition is conducted responsibly, employers and workers adopt digital wage payments smoothly, and they can really reap the benefits of the transition. Of course, it's a big word to say responsibly, and what does it mean actually? We have identified 5 issues to consider when promoting responsible digital wage payments. We have done over the past few years a review of literature, studies that was done by many different partners, and we have done also some studies. We have reviewed relevant international labor standards. One is key to this work is the Convention 95 on the protection of wages. We have also reviewed the UN principles on responsible digital payments and good practices on digital financial inclusion and financial consumer protection. So you can see the 5 issues presented on the next slide, if my colleague can change. So yeah, we came up with those 5 issues that are of choice: accessibility and security, transparency and privacy, fair opportunities and fair treatment, and enabling conditions. Let us move to the next slide so that I can give you a little bit of insight for each category. So the first issue is about choice. And there are 2 aspects around choice. First, the choice of the method of wage payment. We have done a review of the policies around the world, and we have seen that in 22 countries, at least, laws and regulations require employers to pay wages digitally for all workers or for certain categories of workers. When the digital payment is not required by law, the choice may occur with the consent of the workers or through collective agreements, for example. We observed in the countries where we are working that enterprises found it difficult to seek consent from all their workers when they digitize wages. However, we see that good practices really show that consultations and exchange of information between management and the workers contribute to an easier and a successful digitization of wages. If we move to the next slide, it's about, oh no, sorry, the previous one, I missed one aspect, which is about the choice of financial service providers and accounts into which the wages can be paid. From the work we have done, we see that enterprises may find it complicated, and sometimes it is more costly for them to pay wages on workers' existing accounts. In studies done in Peru and Cambodia, for example, we saw that workers are sometimes required to open a new account at the bank used by the employers to receive their wages. This leads sometimes to workers having several accounts, with some of them being dormant. So it doesn't really benefit the workers, and it doesn't benefit the financial institutions either. Let us move to the next issue, which is about accessibility and security of income and assets. Last week I was in Peru, and I heard that some workers in the plantations were receiving their wages into bank accounts, but some of them had to take a day off to go to the nearest bank to withdraw their wages. Others had to queue for several hours to cash out their wage. We heard similar concerns in Asia. If I can remember, in India, there was a similar concern of having to take a day off to go to the bank and cash out the wages. We also learned that workers may be charged a fee, often high compared to their wages, to cash out their wages, or they may be required to keep a minimum balance on their account. In those cases, digital wages bring more pain than benefits to the workers. I think these examples stress the importance of making sure that workers have an easy, convenient, free or affordable access to their full wages, and when they need, actually. We can see in some countries that there are free basic accounts, there are payroll accounts, there are digital accounts or mobile money accounts that provide good solutions to avoid these issues of cost. We also see that a stronger financial infrastructure helps a lot to reduce the cost for the workers. If we move to the next slide, which is about transparency and privacy. I mentioned before, and Leora also mentioned that before, that workers are sometimes charged fees to access their digital wages. They may know it, or they may not know, or they may not understand, actually. Fees may also be charged to maintain accounts or to make transactions, simply. When we want to implement responsible wage digitization, it is important to ensure that complete, accurate, and not non-misleading information related to the access and the use of digital wages and other financial services is provided to the workers and also to the employers. Let us move to the next one, which is about fair opportunities and treatment. So for this slide, I wanted to mention to you I wanted to make a reference to the contribution of digital wage payments to identify and address gender pay gaps, actually, because by improving the transparency of the payroll at enterprise level, the enterprises can identify and address the gender pay gaps. In Jordan, for example, a few years ago, the ILO has done some work there, and a sectoral collective agreement regulating pay gap issues in the private education sector stipulated the payment of teachers' wages into bank accounts. So it was just to share with you some another type of initiative and another type of contribution of digital wage payment to reduce gender pay gaps. And the final aspect, or the final issue that I wanted to mention to you, is about enabling condition. This is the last one, but it's not the least, of course. And from the work we have been doing in the 6 countries that are the Philippines, Indonesia, Cambodia, Kenya, and Mexico, we learned actually that conducive policy and regulatory frameworks enable responsible transition to digital wages. We noted the importance of labor policies, laws, and regulations that authorize, encourage, or require the digital payment of wages. However, we have also seen that labor laws in some countries do not recognize mobile money account, for example, as a wage payment method. And this is the case, for example, in Kenya, in Peru, or Indonesia, where we work. And it is seen by some actors at a national level as a barrier to scale up digital wages. The last one is about, if you come to the previous slide, please. Under this enable condition, I have put here the infrastructure readiness because this is key, but I'm pretty sure our next speakers will mention that, so I will give them the space. But finally, what we have seen in all the countries where we work is a need for developing capacities the capacities of the enterprises so that they can transition responsibly, but also developing the capacities of the workers so that they better understand what digital wages are, what are the fees that are charged, how they can access their wages, and how they can make good use of and safe use of other financial services. So with these 5 issues, I gave you a snapshot actually of our learnings over the past few years, but you can find much more in the brief that we have published a few years ago. This is the brief on promoting responsible digital wage payments, where each issue is elaborated with some examples. So I encourage you to have a look. There are many challenges, as we have seen, to scale up digital wages, but we see that solutions are explored and tested in all countries, actually, by governments, by employers, and their organizations, by trade unions, by financial service providers, by development partners. So I'm confident that collective action will help us to accelerate the transition to digital wage payments, responsible digital wage payments, if I may say. So this is it for me. I'm really appreciate the time that I was given to share some of the learnings. Thank you, Greg.
Thanks, Valerie. So we had a sort of global review from Leora, and then going into some of these content issues in more detail from Valerie. And now I'm going to bring in sort of our panel. Luis Rodrigo Morales, who's the Director of Industrial Relations at the IOE. Evelyn Astor, who's Economic and Social Policy Advisor at the National Trade Union Confederation, ITUC. And Verna Saxena, who's the head of Asia Pacific at the Better Than Cash Alliance. And for the 3 of them, they're coming at this from different perspectives, with Luis Rodrigo looking at it more from the employer's perspective, Evelyn from the worker's perspective, and Perna looking at sort of the environment, the ecosystem. So Luis Rodrigo, let me start with you. It'd be great if you could give some examples of sort of good practices of enterprises or employers' organizations in terms of how they can be promoting digital wages.
Thank you very much, Craig. Thanks, Deado, for the invitation and of course to Laura and Valerie for all the information that have provided. I mean, very comprehensive, very solid evidence on all the advantages that are attached to the use of digital wages. So perhaps let me just start before turning it into 2 specific examples. What we see as a benefit and why we strive to promote and to expand the use of digital wages from an employer's perspective. I mean, there's no doubt that there's a wide range of benefits but from an employer's perspective, there's the issue and the case for the transition from the informal to the formal economy. So in all our efforts for transitioning, for promoting businesses to transit from the informal to the formal economy, and also for workers to remain in the formal economy, there's the issue of digital wage payments. Of course, we look at what it entails productivity-wise and competitiveness-wise. And there, a good practice, of course, is to make use of this technology for the sake of keeping healthy financial track records and improve fiscal compliance. So this is one example on one of the advantages that we see, and of course we attach to the use of digital payments the idea of traceability, the traceable nature of digital wage payments, because with the traceability that we can have by the use of these technologies, financial institutions and governments can also identify where these payments exist, and also measure alignment with other contributions, for instance, social security or pensions, pension contributions or employment benefits. So this is also a means to secure on the side of business compliance and entitlements for workers. And of course, the idea about mapping the individual receiving a payment can also serve advancing working conditions, including along global supply chains. So we are also looking at this as a tool to track compliance along global supply chains and better and decent work conditions for businesses, right? There's also the idea about the access to financing, no doubt, keeping historical records as a means for SMEs. So the promotion that we give to SMEs sustainability has a lot to do also to this with this access to financing. And with this relevance of keeping these historical records by means of digital wage payments. It also allows access to markets and transparency that results in making the case for showing the commitment on responsible practices on the side of business. Right, there's the tax records that of course impact and efficiency in tax reporting, and very important, deductibility of taxes of contributions. So having all these wide set of benefits that are of interest, of relevance for companies, we look at the productivity improvement and cost efficiency. So we have companies that are looking at these tools by measuring the loss of productivity if they keep on using cash payments, for example, and therefore by measuring the result is that the transition, the time it takes, and Valerie was making reference to that, the time and resources that are spent for transitioning are worth being taken for the sake of productivity. In the end, it'll pay back productivity. So we have companies that are already partnering with the financial institutions for increasing productivity by means of implementing more automatic ways of dealing with payments. And then there's the aspect of competitiveness. Companies that are striving for favoring their distributors, and especially small companies or merchants to remain competitive against modern retail stores. So the use of digital payments has shown positive in this regard for them to remain competitive in the larger market. I hope that helps understanding the approach we are taking and the practices that we are promoting within companies to transit and keep and educate also and enable digital wage payments, and also to be to sit at the table of policy, because nothing of this is possible if we don't count with an enabling regulatory framework that allows the technology to be implemented, and most important, that prevents the creation of barriers for the implementation of digital wage payments. Thank you very much, Craig. Over to you.
Great, thanks, Luis Rodrigo. Evelyn, let me bring you into this now and hear from you. What role do you see trade unions playing or workers' organizations playing in trying to promote or facilitate the uptake and use of digital wage payments?
Sure, thank you, Craig, and many thanks to the Global Center for organizing this discussion. And I must say that I myself am learning a lot from listening to all of you. Let me start out, just like my employer counterpart, in giving a sort of broad context as to why digital wage payments matter for workers. We know that the vast majority of the world's workforce, almost 2 billion workers, are working informally with limited or non-existent rights and protections. And a lot of this is not by choice. It's often due to a lack of appropriate regulation and enforcement, but also sometimes complexities and disincentives in registering one's business or one's earnings. So with that in mind, digital wage payments can actually be very helpful in supporting formalization efforts by making it much more straightforward for a worker's earnings to be registered by employers, also making it easier for labor inspectors to validate whether employers are actually registering their workers. And as some of the other panelists have said already, digital wage payments can have a lot of other benefits for workers. They can help improve access to Social Security by making it easier to register and pay Social Security contributions. We know that in some specific cases, like in the Philippines and Vietnam, where workers have been surveyed on the effects of transitioning from cash to digital wages, workers reported that they appreciated that these transfers were instantaneous, safer than cash, and helpful in fostering their ability to save. But in order for this transition to be successful, indeed, I really want to stress the need for early and meaningful dialogue with workers' representatives, and they really do have a role to play here. Workers need to be informed early of the plan changes. They needed to be consulted on how these changes will take place in practice. And trade unions, as democratic representatives of workers, have a very important role to play in channeling workers' concerns and in addressing some of the challenges that can be sometimes accompanied by digital wage payments. And those challenges can include a lack of trust. This has been shown to be a big issue in some countries. And I think in the video in the beginning of this webinar, it was also indicated that there was in the beginning a bit of a skepticism by both the worker and also the employer, by the way, on the transition, because some workers are inexperienced with digital wage payments, and there's sometimes also perceptions of fraud. And this requires, I think, a strong information campaign and involvement of workers' representatives early in the process for planning the transition and also communicating the changes to their members. There's also sometimes difficulties in accessing digital payments because of technological problems or limited financial infrastructure that might make it hard for workers to access their wages due to the necessity of downloading an app or finding an ATM. And linked to this, there's also a need to avoid increased costs associated with having a bank account or accessing cash from an ATM. And in Vietnam in particular, when the ILO reviewed the transition towards digital wages, they found that some workers found that the fees associated with withdrawing money or making digital payments were prohibitively expensive. So this is a really serious concern to take into account, especially as many workers in these countries might already be earning poverty wages. And this has to be mitigated through affordable financial infrastructure. So maybe I can stop there for the moment, but just to say again, these are changes that cannot be done unilaterally. These are changes that require, I think, adequate information and consultation of social partners, both trade unions and employers. And also there may be a role for governments to play as well in terms of ensuring adequate regulation around financial infrastructure and consumer protection. Thank you.
Thank you. Lots of excellent points there, Evelyn, and diving into some of the challenges and also proposing ways of which those challenges can be tackled, which is great. Let me bring Prerna into the conversation now. And it'd be great to get some guidance from you about this environment that the employers and workers are operating within, and how that environment, that ecosystem, can support the adoption of digital wage payments for both employers and workers. And what has been your experience of the Better Than Cash Alliance in trying to promote that enabling environment?
Thank you, Craig. Greetings to all the speakers and participants here. Thank you for inviting me to this webinar. It's great that we're talking about responsible payments digitization in the context of wages. And I'm thankful to Valerie, who already referred to the UN Principles for Responsible Digital Payments, which are a set of 9 principles which give us an overarching guidance and actionable insights on how we can make digital payments ecosystem more trustworthy, more inclusive, and more responsible. I know we've been using this word responsible quite a lot in this webinar, but it's very important to understand and emphasize as to what it means. It really refers to making the digital payments ecosystem generate trust and equity for all. And while we have engaged with a lot of our members, which are governments or brands or private sector entities, international organizations, we have realized that application of UN principles for responsible digital payments can make a lot of difference in having a robust and inclusive digital payments ecosystem. And I will straight away go to a few examples because we've already talked a lot about the challenges and what needs to be done. So let me take up 2 examples of what we have seen and how we have intervened there. Most of us know that in Bangladesh during COVID times, there was great leadership shown by the government, where they not only just digitized the social benefit transfers, but they also came up with a robust package for the incentive package for the ready-made garment industry, which is the most export-oriented industry there, and the incentive for the industry was payable only to the private accounts of wage earners. And to get benefited from that incentive, a lot of factory workers opened almost close to 1.9 million mobile money accounts over a period of 2 weeks, and the government was able to make transfers to digital wage transfers to these workers, and the factory owners were also doing the same. However, when the incentive stopped in August 2020, the trend kind of started reversing, and what we learned that a lot of factories went back to paying wages in cash. So the benefit that the wage earners, and primarily women, because 80% of the wage earners were women, the benefit that they were experiencing of having more agency and control over their income and of being able to use it for the health and education of their family members, that started getting reversed. Now, the reason was because most of the stakeholders, including the factory owners as well as some of the wage earners, could not see long-term benefit in the adoption of digital payments because there were risks of fraud. Some of them were concerned about the high cash out fee, not being able to access their funds when they wanted. And to address all this, what we have realized that we have to definitely work across the value chain as it was indicated earlier as well. And now we are partnering with the government of Bangladesh in their Smart Bangladesh initiative, where we are trying to address some of these systemic issues. We are working on adoption of digital payment through Bangla QR across various use cases. So it's not just the wage earners, but also the micro merchants, and also other utility payments could be done through that Bangla QR, and that helps increase the use cases as well as limit the need to cash out and keep the funds digital. And this will lead to sustained adoption of digital payments. At the same time, we are also working on enhancing the intervention with tier 2 factories, because a lot of tier 1 factories are already digitized and have made that transition, but a lot of workers in tier 2 factories are yet to get benefited. So we are engaging with the stakeholders and making that happen so that the benefits stay for a longer period. And this shows the importance of principle number 5, if I may say so, about giving choice to the user through interoperability, and principle number 9, which talks about championing value chain accountability, because all stakeholders, be it the government, be it the financial service providers, be it the factory owners and workers, everybody has to work together, and definitely focus on principle number 3, which is prioritizing women, because majority of these workers are women. Moving on, I also want to highlight the work that we did in partnership with you in Jordan, where we did a survey and found out that almost 75% of the workers in Jordan were migrants, and while they were getting paid digitally, they were facing issues about accessing their funds, because a lot of them were not comfortable with Arabic. Only 4% of them knew English, and only 9% of them knew Arabic, whereas mobile money accounts or the platforms were primarily designed in Arabic language. So that gave us this insight that the mobile money account and the platforms need to have multiple language option, and that's how a lot of mobile money operators design their platforms in multiple languages like Hindi, Bangla, along with English and Arabic. That gave a lot of freedom and comfort to the wage earner to transact digitally. At the same time, since these workers were mostly migrant and 2/3 of their to remit a large part of their earning back to their home countries, it was important that they get that functionality through their mobile accounts. And so a cross-border remittance remittance facility was also introduced, which helped the workers to keep their funds digital, as well as being able to send money to their families back in their home countries smoothly without taking time off from work or without paying extra commission for that service. So interventions like this definitely can be very useful in driving adoption, and definitely the need I would want to highlight here again for the financial service providers to understand and design for the unique needs of wage earners, and not just see them as one-time user of financial services, but the whole gamut of services that they can be using and benefiting from, which also can give revenue to financial service providers. Thank you, Craig. I'll stop here for the moment.
Yeah, no, that's great. So all the speakers have done a really good job of highlighting not just challenges, but also solutions to those challenges, which is super helpful. Let me invite Leora and Valerie back up as well, and just give each of you sort of parting thought in terms of how we're going to get to that next 160 million. We've made great progress so far. It's probably mostly with the larger enterprises, and now as we're trying to work down into smaller enterprises, additional challenges are emerging. So I'm just interested to hear your thoughts on what might be possible solutions and next steps. And we'll just go in the same order. So Leora, let's start with you.
Thank you, and it's really been quite an interesting webinar, and I enjoyed hearing the other panelists. And to pick up what Mprena was saying, and the others, and answer a question in the chat, financial education is important and critical, but we can't put the onus for good financial behavior only on the workers. It really is going to require to build the confidence of workers in the financial products, so that they use their account for more than just transactional purposes, that they save money in the account, they use their accounts for payments, for bill payment, for remittance payments. Will require regulators to have strong and enforced consumer protection of both not only financial institutions, but also agents and client-facing staff, as well as the financial service providers to design the right products with these specific workers in mind. Thank you.
Excellent. Thanks, Leora. Luis Rodrigo, over to you.
Sorry, Craig, can you repeat the question?
Yeah, so we've identified a number of challenges and providing solutions to those challenges. And what about the next step? How do we move to the next 160 million that haven't gotten there yet? And what do you see as sort of a key challenge and solution to that challenge that we should be tackling?
Thank you, Craig. Certainly. Well, look, challenges are vary across regions, across countries, and across sectors. So I think the first effort we have to make is to identify the context and specific needs. It was mentioned before in the video also, and in the papers that the ILO has produced, that there are some challenges that could be cultural, others can be educational or infrastructure wise. And there, Evelyn mentioned something that's very important. Social dialogue is important there to identify these challenges. So strengthening social dialogue towards this identification remains key to tackle and develop the specific interventions. Then second, communication. I mean, I talked about the benefits, but we have to speak out more about the benefits. There's a lot of fears on some sides, some doubts and misinformation on what the transition entails. And we can only overcome these fears or these barriers by communicating what are the benefits. I mentioned the benefits are around productivity or competitiveness. And third, we have to acknowledge the role of governments. They play a very important role in developing frameworks for these for technologies to be used, for infrastructure to be developed, and also to avoid the creation of some barriers such as excessive taxation via these transactions, for example. And on the side of business, we have a role to play and to think about also the costs and financial institutions that are or the fees that are attached to it. So I think I would say these are four important steps to take for the promotion of digital wage frames. Yeah.
Thanks, Luis Rodrigo. Evelyn.
So I will perhaps echo Leora a little bit. You know, when it comes to financial infrastructure and financial behavior, the onus shouldn't be on workers. And it shouldn't also be on financial service providers themselves to regulate themselves. I mean, one of the big challenges here is that, you know, workers should not be financially penalized during the transition to digital wages. They should be able to open a bank account. They should have full and transparent information on the fees and other conditions. They should be able to choose their financial services provider. And here there's really a role to play by governments in terms of regulating the practices of banks, of mobile money apps to avoid predatory behavior and excessive fees. And we've seen some governments and regional organizations actually starting to do this. For example, in the EU, there's a basic bank account directive that sets out very clear conditions as to the rights for people to open up a basic account and receive transparent information on fees and other financial services, as well as regulate the level of the fees that a person might pay. So I think here, you know, in this discussion, we cannot forget the role of adequate regulation, and only through that will we be able to ensure that the financial infrastructure will be ready and appropriate to facilitate this transition.
Great, thanks, Evelyn. And I guess what I'm hearing is that we should have a couple other people at the table, have the government regulators as well as the financial institutions sitting here as well. So let me go to you, Prerna. You have a final thought for the audience? We're past time.
Yes, very quickly, just to say that, of course, all stakeholders have a great role to play, and government and financial service providers definitely. But I just want to highlight that the brand owners and the factory operators, they also have a responsibility, and a big responsibility. So having digitization of payments as core part of their sustainability strategy, understanding and implementing it with the perspective of workers' larger well-being as to how digital payments contribute to the workers' well-being and how this is critical for their business continuance is important. And I think maybe it's a good time to also think about giving some incentives or recognition to the factory workers or the staff members who implement digitization initiatives, because everybody likes to feel acknowledged and praised for the efforts that they do. So definitely there are interventions required at the ecosystem level, at the designing of financial services level, but also at the macro level where the workers are based and how they can be taken care of. Thank you.
Thank you. Well, I want to praise and acknowledge the inputs of Leora, Prerna, Luis Rodrigo, and Evelyn for an excellent webinar. And Valerie, I want to let you have the final word. So you can go ahead and wrap it up and make your final statement.
Yeah, no, thank you. Maybe to answer your first question, how do you reach out to the, how do we have the smaller enterprise to transition? And this is what we have been trying to do, actually. And we came up to the thinking that the way it could work is also to to integrate this digital wage payment into a broader digitization agenda for the SMEs, right? So it's the digital wage payment is only one flow amongst other flows of payments to suppliers, to and from customers, etc. So it may be a way to accelerate the transition in smaller enterprises. And another point that I wanted to make is that, and I think it maybe recompile what all the speakers have been saying, is that there is a need of having more evidence on the business case, on the benefits for workers, for employers, for governments also. So this is exactly what the Global Center is doing. We have created a knowledge platform where we upload documents, research tools to help actually actors, including governments, workers' organization, employers' organization, development partners, financial sector actors also to promote this agenda. So it's the website is easy to get to. It's only digitalwages.org, and I encourage you all to have a look and to also send us your publications on these topics so that we can upload them. But just to finalize this webinar, I would like to thank the great panelists who are also members of the steering committee of the ILO's Global Center on Digital Wages for Decent Work. We've been working together for the past 2 years. We've achieved a lot together, and we look forward to your further guidance to go faster. And I thank you also all the participants who have joined us for this webinar. We hope we can have other webinars in the month to come. Thank you very much.
Cheers. Have a good day.